to talk about student loans for college. So let's start with the beginning. Who should be applying for and getting a loan to attend college?
Yeah, that's a great question. So the good news is there's a bunch of options out there, right? So there are actually options for students themselves to take out loans and parents to actually take out loans as well. So if we're talking about what loans are more favorable, generally speaking, federal student loans are more favorable than private student loans, as we should say. As far as who should be taking out those, well, the students actually are getting better loans, are getting loans with lower interest rates, and if the family is actually qualifying for financial need, there's the possibility they could receive a subsidized student loan. So that means while the student's enrolled in school, the government's actually paying the interest on the loan up until that point and up until repayment.
That's great.
Yeah.
That's very good. Okay. So once we have the loan established, let's fast forward now. We've got a loan. We haven't had to pay the interest because it's the federal or whatever the arrangement may be. Now the student graduates, well, that's another question. When they graduate, is that when they've got to start making payments, or do they have to make payments while they're in school? And then who's responsible? Who's going to pay it back?
Yeah, so a lot of great questions. So their repayment usually doesn't begin until 6 months after graduation on the loans. Doesn't mean they can't be making payments on the loans, right? So let's say we have a student that's maybe borrowing loans, a part of it is subsidized, a part of it is unsubsidized, and then the parent as well decides to take out some federal student loans. Well, the interest accrues the day you take out the loan, so you'll find that maybe a parent borrowed $15,000 in a Parent Plus loan, but when they go to repay it, it's now $15,500 or whatever it may be. So they actually can make payments as soon as the loan is dispersed, and usually that can be a good thing to lessen how much they pay over time. Now, as far as who should be repaying the loans, I think what's really important to remember is who is actually responsible for the loans, right? So if students take out student loans in their name, they don't require a cosigner, they are responsible for that loan. If parents take out a federal student loan, a Parent Plus loan on behalf of a student, the parent is responsible. Too many times I've seen arrangements where parents borrow Parent Plus loans and they have kind of a side agreement with the student saying, hey, you know what, we're going to take out the money, but when you graduate, you have to pay us back. But if the student graduates and says, hey, I don't have $600 a month to pay you back, and I'm just like going to ignore it, the parent shouldn't, right? Because it's the parent's loan, it affects their credit if payments aren't being made on time. So we really have to understand who is responsible for the loan, and that's how it works with federal loans. With private loans, most of the times they're not as generous as federal education loans, especially on the death and disability discharge provisions. Because if a student goes to apply for a private loan, chances are they're going to need a cosigner. And who's going to be a cosigner? Probably mom and dad. So even if maybe the student becomes disabled or passes away, it's possible that the parent is still on the hook for the debt, whereas that doesn't exist with federal loans.